Our investment philosophy at Invico is focused on generating cash for our investors, and we do that through two core strategies, credit and energy. On the credit side of the portfolio, we're focused on private lending as well as broadly syndicated loans. This allows us to have diversification in the portfolio as well as liquidity. On the energy side, we're focused on cash-generating assets in known basins with low operating cost through both non-operated working interest as well as royalties.
Invico is unique for Canadians who are searching for private yield opportunities. We focus on the mid-market, call it $5 to $50 million of opportunities. At Invico, we like to look at sectors and areas that are less well attended by other capital providers. We have a north-south origination capacity that takes us through many markets in the United States where we can also search for the very best opportunities. And additionally, we have an energy sleeve within this strategy that provides additional diversification to investors, commodity exposure that's unique, and some tax efficiency.
Our initial screening processes serve to ensure that the incoming opportunities will meet our initial investment underwriting criteria as outlined in our offering memorandum. For example, questions that we ask ourselves, is the investment opportunity a debt or lending opportunity, or is it an energy working interest opportunity? Are the assets of the business located in Canada or select U.S. regions? Does the investment opportunity hold the promise of meeting our underwriting criteria, such as our return objectives? If the answers to these questions are yes, then our investment team will generally take a closer look.
We probably turn down 10 opportunities for everyone that we'll seriously look at. Well, by the time it gets to the investment committee, it's been heavily evaluated. And at that point in time, the investment committee is not just looking at this single opportunity, but how this fits into the entire portfolio.
The 5 C's of credit, being character, capacity, collateral, capital, and conditions, are widely recognized among institutional lenders and guide our assessment in evaluating potential lending opportunities. These factors collectively ensure high-quality borrowers, minimize risk, and ensure responsible lending.
Our investment committee is comprised of seasoned professionals that have years of experience in both private debt structuring, complex transactions, as well as mergers and acquisitions. This combined experience provides the investment team the ability to really know the questions they need to ask and the areas they need to focus on.
So we actively monitor all of our loans, stay in constant communication with management. If we do end up in an issue where a loan is non-performing and that can't be solved at the management level, one of the things that Invico has the ability to do, unlike most banks, is we can actually step in and actively manage those investments and work out those companies and look to monetize them and liquidate them in the future to recover what we had underwritten.
We do a deep dive on all our shortlisted investments. We focus on the team, the track record, the ability to withstand a down cycle. Any business that doesn't have a long-term track record of generating cash really doesn't qualify. If they don't meet our servicing requirements, then they just don't pass the test and they're exited from evaluation. That gives us the best opportunity to put money to work for a good yield, but a low risk, which is critical, and one of the ways that we've been able to clock over 10 years of positive returns and track record.